Crypto Hotep here with another investing video. We are on week 106 of the Family Portfolio and Dividends Tracker. Thank you guys for tuning in as always and for showing support. We took a hiatus from last week because there was no update last week because me and the family were on our spring vacation. So we are back from vacation, had a good time, and it's business as usual. Before we go to week 106, if this is your first time watching the video, feel free to go to the channel, hit the subscribe and the notification button, support the channel, and go to week number 1. That's week number 1 is where I break down my whole methodology, the reason why we do these stock portfolio updates and trackers, and the reason why we do them every week. And basically, you're following the investment journey with me and my family. So every week we go through our portfolios, go through market events and news, and basically just track the portfolio as it grows. And for first and foremost, these videos are for my family, and hopefully they'll find them. Whenever I'm gone, they'll find them. They'll see what Dad did in terms of investing, and maybe they'll carry on investing. That's what I would hope. They don't have to carry on recording or anything like that, but hopefully carry on investing and the importance of investing as well, especially in this economy now. But if you find these videos helpful, feel free to like, subscribe, share the videos, comment on them. It helps the algorithm spread the news to other like-minded individuals like yourself. But again, before we go to week 106, we normally go over the market events. So let's see what happened in the market events from April 17th all the way up until today. Okay, so a long stretch here. So we asked Grok here to give us a quick rundown as we always do. And a couple things did happen. We talked about the U.S. and Iran conflict that has been going on. So the full reopening of the Strait of Hormuz had a somewhat effect on the markets greatly, right? The S&P 500 surged to fresh all-time highs. First close above 7,100 on April 17th, and then later pushing past the 7,200, which is all-time high by April, by month end for April. So very cool there for the indices. And in terms of news, though, we have, so Iran declared the Strait of Hormuz completely open for commercial shipping on April 17th. So that was big. There has been optimism on this ceasefire, but again, it's been handled day by day. This conflict is day by day, and the markets reflect that volatility. Q1 earnings have ramped up here. So this past week, we've had a lot of tech companies that have reported quarterly earnings. So Google had a big Q1, record revenue, up over 109 billion. And that's up over 22% year over year. You can't make that up. I mean, they told you Google was out and ChatGPT was going to eat its lunch, and that's not the case at all. Tesla, Boeing, Intel, and others reported in the April 17th to 25th window. And then overall, S&P 500 earnings growth tracked 12 to 14% year over year, led by tech, obviously. The Fed meeting. We did have the Fed meeting, and Jerome Powell's last Fed interest rate decision that he announced was this past week as well. The interest rates did hold at 3.5 to 3.75%. So nothing changed. Okay. And again, as I mentioned, this was Jerome Powell's last meeting as the chair. This decision, though, was very indecisive. There were difference of opinions from one side or the other here. So language left room for future cuts, but three officials dissented. This has been rare since 1992 over inflation risks from the oil volatility, which is from the Iran and U.S. conflict. Okay, so just as a heads up, and then Jerome Powell did say that he was going to be confirm that he will stay on as governor post May 15th as well. Okay, no new monthly CPI or unemployment rates that were in this window, so nothing like that. Initial jobless claims rose modestly to 214, but still historically low and stable, so nothing there. either a couple things to look forward to. Job openings in March. That's going to be reported near May 4th through the 5th. U.S. trade balance as well. May 8th, April non-farm payrolls, unemployment rate, and then wages. That's going to be a very volatile week coming up here. And then mid-May, full Senate vote on Kevin Walsh as Fed chair. Late May is next CPI, which is April data, and then more Q1 earnings on the tail end, so the remaining tech side. Okay, so before we go to week 106, again, guys, let's go to week 105. Week 105 saw us with a balance of $4,193.32 in the family portfolio. That's up a money-weighted rate of return year-to-date of 2.29%. Okay, so what happened this week? So this week, or this past stretch, saw us with a balance of $4,238.48. So we're up, and that has a money-weighted rate of return year-to-date of 3.08% positive. So we are positive now, guys. Again, dividends earned of $15.06 and a market gain of $107.71. So if you look at this chart here, again, this is that lull of despair that we were in at late March, mid to late March here, where we were negative and, the world was coming to an end, so to speak, right? But what did we do? We stayed the course. We kept depositing money into this portfolio, still bought the companies that we felt strongly about no matter what's been going on, and quickly reversal happened. This is what happens in those markets, guys. Sometimes, the system wants to shake you out of your positions, shake you out of your holdings. Sometimes they create fictitious events that happen as well to do so. And what that does is that just sells, if you are very emotionally driven, stock market's probably not good for you. And because if something happens in the news that can affect some of the holdings or companies that you have positions in, and that could scare you, then that could be a premature sell-off, meaning that you could sell off your companies because of a news event. And instead of holding them and believing in them as you should and knowing what they do, where you just let time do its magic, right? Time in the market beats timing the market every time. So let's see what happened with our activity from the 17th until now. So we did have a dividend from Old Realty. I believe we reported that the last time. And then other than that, really nothing happened besides our deposit. So we had our regular deposit here, only $15. And we did have some buys. We bought some Domino's Pizza, more Celsius, McDonald's, Sony, and Tesla. So we had some pretty good buys here because most of those companies were in the lows. Okay, so let's go to our portfolio, bottom to top. Our youngest now is at the bottom. Okay, so our youngest has a balance of $611.40, money-weighted rate of return year-to-date of 1.72%, dividends earned of $1.24. So right now we have Starbucks leading the way, up over 26%. Starbucks has had a fantastic turnaround this year. Starbucks is doing all the right things with the new CEO. They're doing what they need to do. And that's what I said was going to happen with Starbucks and Target. I said, watch out for these two. I think they, they had their little kind of weird point last year and doing a lot of woke things and whatnot. I think they've woken up finally the right way, and they've begun their businesses again with some of the processes that made them popular in the first place. So Starbucks looking good. Costco doing what it does, up over 17% year to date. Apple up almost 44%. And then Tesla, Sony, the tech space, still a little bleeding out. We're looking for a bottom here on Tesla, but all in all, still good positions. Let's go to my wife. My wife's portfolio stands at $626.76, money weighted rate of return of 0.67%, market gain of $2.42, and dividends earned of $1.60. So as I mentioned before, Google had fantastic earnings. They're a fantastic company. They believe in AI themselves. It's just an all-around good play. That's not financial advice, though. But Google itself is up over 22% in my wife's portfolio. Pepsi still up over 10% and has been up over 10% in the double digits this whole year. Microsoft down over 10%, unfortunately. Tesla also down 12, and then Celsius, the worst holding now, used to be the darling of this portfolio, but now it's the worst, down over 25%. A little side eye here on Celsius. However, they have fantastic backing with Pepsi. So we're not going to make any premature selling or premature decisions on that. And that's the big thing with our portfolio. It's more of just buying and holding these great companies versus trying to trade them. Okay. Next, let's go to our middle. Our middle has a balance of $651.57, a staggering 14.98, almost 15% money weighted rate of return year to date. Market gain of $79.37, dividends earned of $1.96. What's leading the way here? So a lot of green in our middles portfolio. It's funny because if you go to the channel and look at some of the videos last year and look at our middles portfolio, it's a complete 180. And that's how investing is. That's how investing can be, right? It's a very slippery slope. There's a lot of ups and downs. But again, we've had fantastic certainty and just confidence in the companies that we chose, right? And the companies that we feel strongly in. So as I mentioned just a couple portfolios ago, Target was another one that I said, hey, there's going to be a turnaround here. We're up over 33, or our middle is up over 33%. Amazon up over 19% and in the green. Amazon was also in the red several months ago here, but they've turned around. Boom, now they're in the green. Costco up over 17%, very similar to our youngest. Google, as we mentioned before, up over 25% in Google. Starbucks up over 26% in Starbucks. Tesla down over 11%, and then Sony down over 21%. It's crazy. Starbucks and Target are carrying this portfolio and have insane money weighted rate of returns. Just crazy. And just this, our middles portfolio is now one of the best performing portfolios in the year. Okay. Let's go to our oldest. Our oldest has a portfolio balance of $1,159.64. Money weighted rate of return year to date of 1.14%. Dividends earned of $2.78. And then money weighted rate of return of 1.14%. Still the simplicity of this portfolio. Just four holdings: Apple, Costco, McDonald's, Tesla. We've talked about Tesla. With the others, with McDonald's here, we are down a little bit on McDonald's, down over 5.5% here year to date, but Costco and Apple making up for it. Costco up over 17% in the double digits, and then Apple almost breaching 4% positive. Okay. Last but not least, my portfolio. My portfolio is a balance of $1,189.11. Money weighted rate of return of just 1.28%. Pretty crazy chart here that you can see. And this is investing. This chart here explains investing in a nutshell. You could be at your highest point here, and then everything come crashing down here in despair, only for everything to go back up. This is literally investing. If you could snapshot investing, this is what it is right here. With our sectors, technology is now recovered nicely. We are not bleeding out anymore. The tech sector of my portfolio is up over 7%. Google, that's held on by Google here. Google's up over 22%. Microsoft, we're still trying to find some footing in Microsoft. Okay. My finance sector still down over 7.5%. Visa, Moody's, not really worried about that. Visa did declare their dividend, I believe, this past week, so that's good to hear. Realty for our real estate is up over 15%. Industrials and energy down over 2.5%. Consumers and staples, which is Lowe's and Costco, we just talked about Costco. Not really concerned about that here. And then we have restaurants and food down over 3%. 7.5%, and then pharmaceutical, which is AbbVie, down over 8%. Again, I have more red than green here. However, overall, the portfolio looks decent. Would I want a higher money weighted rate of return average? Of course I would. But right now, I'm going to take what I can get with this market because it's very volatile. One day you could be up, literally next day you could be bleeding out money. So, I'm going to take this as it comes, and we're just going to continue with the path forward. So it feels good to be back, guys. Hope you enjoyed this recap for week 106. The family portfolio balance is $4,238.48. Money weighted rate of return of 3.08% collectively. Dividends collectively were $15.06 and a market gain of $107.71. If this video is helpful, guys, feel free to like, subscribe, comment. Let me know what you think. And let me know what you guys are investing in as well. And as always, thank you and happy investing, guys.